Hello, everyone. Good evening, traders. Good morning or good afternoon from wherever you're watching me from. Welcome to today's live trading session. It's the second day of October. Hey, everyone. Good evening, good afternoon, and good morning from wherever you're watching me from or hearing my voice. Welcome to today's session. I had to quickly make sure that the connection was fine before we get started again. It's the second day of October, and guys, we're stepping into a new month of opportunities. Forget about September's mistakes, forget about the drawdowns, forget about the gains as well. Today, or this month, today rather, is your reset button. It's your reset button, is where you get started again with a new and clean slate. Now, if you can hear me clearly, let me know in the chat before we get started. Once again, welcome to today's live trading session. And the reason why I told you guys we're starting on a new slate is because, trading is like football, right? No matter how badly your team played last week, when there's a new match and the referee blows the whistle, it's a brand new match. The score resets to 0-0, and you start over again. And that's the energy I want you guys to carry into October. Okay, so I'm going to ask you guys if you have felt like September was a bit tough for you, if you felt like you needed to learn something from September, even if it was something that was painful, right? Then you're exactly where you need to be tonight, because this session is not going to be about just the charts. We're going to talk about strategy, psychology, and how we're going to, approach October differently. All right. So let me know in the chat your name and where you're watching me from. Okay, I see you guys already saying you can hear me. Perfect. Welcome to the session, guys. Let me know in the chat your name and where you're watching me from, all right? And while you do that, I'm just going to run over the quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. Now, you guys, let me know your name and where you're watching me from. If it's your first time also, participating in an Octa live session or webinar or anything on the YouTube channel, let me know as well. Mostly these live trading sessions and webinars are where we teach you how to navigate through even the complexities of the Forex market, show you our strategies, and also show you how you can apply that to your everyday trading activity. While you tell me about yourself, I'm going to also tell you guys about myself. For those of you that don't know me, my name is Ambrose Ebuka. I have 6 years experience in the markets. I trade with precision, combining both swing and scalp setups to stay consistently informed in the market. Now, if you don't know what these swing and scalp setups are, I would explain to you in the course of today's session. It's very important that you stay till the end of this session. And also, there's also something at the end of this session, a promo code on how you can get 100% bonus on your deposits. All right. Now, my focus or the pairs that I trade the most are gold, GBP JPY, and GBP USD, where I hit above 85% accuracy and a back test like clockwork to stay razor sharp. Let me look at the comments and see who we have in the session today. Sadiq from Kano, welcome Sadiq. Oluwatobiloba from Nigeria, welcome. Augustus, welcome to the session. Watching from Enugu State, welcome. Allen from Lagos, welcome. Emmanuel from Qatar, welcome to the session. Welcome, everybody. Welcome. Now, today we're going to look at the economic calendar. You guys know that before I go to the charts, I like to, look at the economic calendar, know what's going on economically before I go over to the charts. And that's because, the fundamentals and these economic events are major drivers of the financial markets. And then I'll go to the charts technically and show you guys, zone trading, which is a strategy that I use. Very simplified, supply and demand trading strategy. We'll review the dollar index and its correlation with other pairs. I mean, if you guys have been trading, you would know that the dollar index have been crashing. And in our sessions, I always tell you guys, I'll map out the zones and tell you guys, if you're trading below this zone, we're still bearish on the dollar. But I'll go ahead and share my screen and show you guys that as well. And I would give you guys a rundown on how you can get October right. Remember, it's the second day of October, guys. How you start this month would be a huge factor on how you would end the month. And we would have a Q&A session, right, which is where you get to ask me questions, and I'd also ask you questions as well. So very important that you pay attention to the session. This session will last for about 45 minutes. You guys are already using the YouTube live chat, so you can continue to use that to ask your questions. I will be checking them periodically to see if you have any questions, and I will answer your questions. All right. Again, welcome to today's session. Now, before I go into the strategy and the content, let's do a quick recap at September, because if you don't understand yesterday's markets, you may not understand today's markets, right? If you don't understand last month's markets, you don't understand this month's markets. I'm going to go ahead and share my screen. We'll look at the dollar index. Go to the monthly. All right. So this is the monthly time frame on the dollar index. I think I should go lower for more information on the dollar index. Okay, I think this is perfect. So all through August, July, all through August, we are bearish on the dollar index. Now, if you guys remember in our last sessions, I told you guys that as long as we keep trading below these zones, we're still bearish on the dollar index. If you look at what happened in September, right, bearish, and then we started to get some gains, but this doesn't really signify a change in trajectory. Why? Because we're still trading below the major zones. And as long as we trade below the major zones, these zones and this trend line as well, we're pretty much going to still be bearish on the dollar index. You guys know that when you want to, if the market is, creating lower highs and lower lows, or if the market wants to go down on a bearish trend, it's not going to just move down like this, boom, and continue to go down. No, the market creates what we call higher highs and higher lows, right? It may not be as, let me use this, it may not be as perfectly, it may not move in this perfect way. This is what I would call a textbook definition or a textbook illustration, but you would clearly be able to spot the lower highs, the lower lows, the lower highs, the lower lows, and stuff like that, right? When you spot the zones, the key levels, and this is the dollar index, guys, as long as we're trading below this zone and below this trend line, we're still bearish on the dollar index. So yes, we had some gains in September, but you can see those gains are still beginning to come down. The market just came up to create a lower high here, and we're still pretty much bearish. Okay, that's just the summary of the dollar in September. Now, if you know what the dollar index is, let me know in the chat if you know what the dollar index is. Let me know in the chat if you know what the dollar index is. Let me know in the chat if you know what the dollar index is. It's very important, especially if you trade, GBP USD, Euro USD. Very important that you know what the dollar index is. And if you don't know what the dollar index is, I'll give you guys a definition, right? The DXY or the dollar index is like a tool you can use to track the value of the dollar against 6 major foreign currencies. It's like a scoreboard for the dollar. What are these 6 currencies? We have the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. But it's not like an equal comparison, right? The euro makes up the largest portion of the index. So if the euro moves, the dollar really feels it. That's why, when you start trading, you hear that Euro USD is the most liquid, but most traders don't like to trade Euro USD because Euro USD can make like a move that in gold would be 100 pips, but in Euro USD that will be about 20 pips. So people don't like to trade. New traders actually don't like to trade Euro USD. But why does the dollar index matter to you as a trader? Now, the DXY, you can see here, it gives you some kind of idea, a snapshot of how strong or weak the dollar is in the global market. And you can see clearly, just by looking at my chart, you can see that the dollar is weak, clearly. If the DXY is rising, the dollar is gaining strength. If it's falling, like it is right now, the dollar is losing ground. And that's why you can also see what's happening with gold as well. This move in the dollar index can affect everything from Euro USD, GBP USD, gold, oil, and even stocks. Let me know if you guys got that. Let me know if you guys got that in the chat. So what happened in September? The dollar was weak. Why? Because the Federal Reserve started hinting that they might not raise the interest rates aggressively anymore. And investors, traders took that as a sign that the dollar was, losing its steam. Okay. And then we had gold as well, which took advantage of that, surged higher. Like I tell you guys, the weaker the dollar gets, a lot of people look to gold as a safe haven. When the dollar is weak, gold shines. And when traders or investors become very worried about inflation, global uncertainty, the money flows into gold. It's like how people rush buy one, get one free, that kind of a thing. So, and then we also had stocks like the US indices as well, which kind of struggled in September for the stock market. But let me give you guys this question, and then we'll get into today's session. If you could score your September trading, if you could look at September 1st up until September 30th, on a scale of 1 to 10, how would you rate your trading experience in September? Let me know in the chat. Look at September 1st up until the last day of September, which was like 2 days ago. How would you, and score yourself, right? How would you rate your experience in September? Let me know in the chat. And let me know in the chat, guys. Akomi is asking, what strategy do you use to trade gold? I normally use divergence to trade it, but it doesn't seem to work with gold sometimes. You see, the thing about gold is, especially if you're using indicators like the RSI, right? You have to first understand that when gold is trending, and I'll show you guys this in the chart because gold has been overbought for a very long time and it keeps moving higher. When you can clearly spot an overall bullish move rather on gold, you don't have to, trade the divergence that has not formed. I'll explain that when I go to the chart and show you guys. You don't kind of expect the divergence until it forms. Because what gold has been doing, especially traders that trade based off RSI, gold has been dancing around the overbought levels for weeks. It moves down, it pulls down like it's trying to reverse and get down below the overbought levels, and what happens? It pumps again. But I'll show you how to avoid that when I go to the chart. All right. And don't trade indicators in isolation. You have to combine your indicators with price action, because indicators kind of can be late sometimes, and they're just added advantage. You know, you need to understand price action first before you start adding indicators to your trading. Okay, I'm seeing the scores in the chart. We have 3/10, 1/10, wow, 6/10, 5/10. Someone said it was bad. Even a 3/10 means progress, because the only traders that really lose are the ones that quit, and the rest of us just collect lessons from the markets. And like I said, September is September. We're in October, clean slate. How you start this week will determine October ends for you. So we're going to go to the economic calendar right now. And for those of you that don't know this economic calendar, this is the Octa economic calendar. You can access this from the Octa official website. You come down to analysis and education and come down to economic calendar under analytics. All right. Today, economic events today, and that's only because I have filtered it to only the high impact, right? If you're using this, not on the low impact, if you're using this as a beginner trader, you would need to add the medium and low impact just for the knowledge, and then you get to see that, you know, there are a lot of economic events that happen today. But I like to just keep it at the high impact because, you know, like the name goes, it brings about high impact volatility, or, you know, high volatility to the charts potentially. So we're going to just review these two and we'll get into the chart. All right. Let me know in the chat if you use the economic calendar before you start trading. Let me know in the chat. If you use the economic calendar before you start trading, let me know in the chat. Or if you've used it at least once, just once, let me know in the chat. It's very important that you understand how the economic calendar works, and also how these events can affect, you know, the currencies that you trade in the long term. All right. So we have trade balance. MOM means month over month. And this has passed. This was at 2 a.m. 2:30 a.m. this morning. This was at 7:30 a.m. this morning. Guys, very important. You want to set your time zone to your current location, just so that you don't miss out on the release time of the event. Now, if you want to learn or read the economic calendar, I'll give you guys a brief and quick introduction to it. You can just come down, whatever events you see that you're interested in, you click it, and Octa has provided a definition here, and also the influence down here. This is an important aspect of this report. If a steady demand in exchange, this, it will turn to positive, and so on, right? You also need to keep in mind that whatever event you're looking at, the currency here signifies the currency that the event would affect or influence. So here, this would affect the Australian dollar. This would affect the Swiss franc. All right. If I go back and show you some of the other economic events that we had today, you'd see more currencies like the dollar, the euro, and so on and so forth. So you know that, okay, this initial jobless claims would affect the dollar. All right. Let's go back to the high impact. I also need to briefly explain that for you guys. So what does the trade balance mean? The trade balance shows the difference between what a country exports and what it imports. Now, if the exports are higher than the imports, the balance is positive. If it's exporting more than it's importing, the balance is positive. But if it's importing more than it's exporting, it's negative, and it's called a deficit. Now, if you look here, you'd see that Australia's number came out at 1.825 Australian billion, 1.825 billion Australian dollars. And this is way below the forecast of 6,500 or 6.5 billion Australian dollars, rather. I'm just trying to read the numbers here, but this is actually 6.5 billion. The previous was 7.3 billion Australian dollars. You can see that Australia exported less. This report means that Australia exported less and they imported more than expected in August. I'll go over that again. The actual came out at 1.8 billion Australian dollars, right? It was forecasted that it would be, I mean, less than the previous, but not this less. This is way less, right? And what this report tells us is, I mean, if you look at 1.8, look at the previous 7.3, this is way less than what it exported before. Now, for you to export something, it means the people that you're exporting to, they have to, like, you know, transact in your currency, buy in your currency. It's good for your economy, good for your currency, right? But now the reports came out that Australia exported less and imported more in August. Okay, let me give you guys another example. Now, imagine your trading account, right? In July, you made $10,000. And then in August, I mean, it was expected that you'd make $6,500, but instead, you only made $1,825. That's a bit disappointing, right? The same thing here. So it shows you that the economy underperformed. Now, why this is important for you as a trader is, or important to Australia and Australian dollars as well, is you have to understand that generally the economy is tied to the currency. And for Australia, the economy is also tied to commodities like, you know, iron ore, coal, natural gas. And if the demand for these things slow down, their exports are going to drop. And what happens when the exports drop? Less money flows into the country. The Australian dollar weakens because there's less demand for the Aussie, as you can see here, Australian dollars. And the economy, you know, goes down a bit. And in this case, not even just a bit. I'll give you guys an example with Nigeria. Now, imagine, let's use what Nigeria, you know, exports more, right? Oil. If we suddenly start to sell less oil to, you know, foreign countries, dollars stop flowing into the country and, you know, the naira suffers. The same thing with the Australian dollars. And when this report comes out weak like this, it makes the Australian dollar bearish. Now, a lot of traders might sell the Australian dollar pairs like AUD USD, AUD CHF because it signals a weak economic, you know, strength. All right. Let me know in the chat if you guys understood that explanation. Let me know if you guys understood the explanation, and then we'll go to the CPI for the Swiss franc. To confirm if you guys understand, I'm going to ask you guys a question, right? If Australia is exporting less, would investors prefer to hold the Australian dollars, or would they switch to, you know, stronger currencies like the US dollars? If Australia is not exporting as much as it used to, would investors prefer to continue to hold the Australian dollars, or they will switch to stronger currencies like the US dollar? Let me know in the chat. Let me know in the chat, guys. I'm going to ask one more time. If Australia is exporting less, would investors prefer holding the Australian dollars, or would they switch to stronger currencies like the US dollars? Let me know in the chat. What do you think the investors would do? Would they hold the Australian dollars, or would they switch to the US dollars or other stronger currencies? Okay, Hannah says they will switch to stronger currencies. Jovi says they would rather switch to other currencies. Nyongon says, apologies if I don't pronounce his name correctly, they'll switch to the US dollar. And that is correct. They'll switch to the stronger currencies, which is why the Australian dollar weakens. Now, CPI, YOY means year over year. Again, if you want to get the definition, let's say I'm not going live on Octa Broker YouTube channel that day and you want to, you know, understand by yourself, you can just read here. The CPI measures inflation, you know, and it's the change in prices of goods and services compared to the same time last year, compared to September last year. So this is what it was last year, September, 0.2, right? This month, as you can see, for September, the CPI, the Switzerland CPI, Swiss franc Switzerland, it came out at 0.2. It's the same as, the same as last month's 0.2, but the forecast was 0.3, which means investors, economists expected a rise, but it came out as the same thing. What it tells you is that the prices of goods and services in Switzerland are not rising much at all, and inflation is very low. Imagine going to your favorite malls, ShopRite, Spar, and you see bread that was 1,000 naira last year, and this year it's like 1,002 naira. That's just a tiny increase, right? Basically, it tells you that yes, there's an increase, but it's tiny, and the prices are still pretty much stable. And CPI is a huge, measure of inflation. The central banks, they want and they like for inflation to stay at a healthy amount or a healthy level at 2%. If the inflation is too low, people, businesses, they might delay spending a bit because they expect the prices to stay cheap. If the inflation is also too low, the central bank, in this case the Swiss National Bank, you see things like SNB when you're reading articles or looking at Forex news that has to do with the Swiss franc. You'd see SNB, that's the Swiss National Bank, is the central bank for the Switzerland. They may not feel pressure to raise the interest rates if inflation is too low. Let me give you guys another example. Imagine you have a landlord, right, in wherever you stay, Lagos, Abuja, Port Harcourt. Think or imagine that you have a landlord, and this landlord keeps his rent prices at a flat price year after year. Now, you won't be in a hurry to pay him early because you know that this price is not going up. Last year is the same price, this year is the same price. So it's the same thing. Low inflation equals low urgency. All right. Now, how does this affect the Swiss franc? It makes it a big, I mean, most people would not expect for this analysis I'm about to give, but it makes the Swiss franc a bit, weaker in theory. Now, I want you guys to understand this. The Swiss franc is also a safe haven currency. When there's global risk, global uncertainty, a lot of investors run to the Swiss franc, even if the inflation is low. And since the inflation stayed low, the Swiss National Bank would be unlikely to raise the interest rates. Let me know in the chat if you guys understood the explanation and the analysis for the CPI year over year on the Swiss franc. Let me know in the chat. And to confirm if you guys really understand, I'm going to ask you a question again, right? Now, if the Switzerland's inflation stays low, do you think the central bank will raise the interest rates or they'll keep them steady? Let me know in the chat. If the Swiss inflation stays low, if the inflation is low, for the Switzerland, do you think the central bank will raise interest rates or keep them steady? Let me know in the chat, guys. Let me know in the chat, guys. I'll ask one more time. If Switzerland's inflation stays low, do you think the Swiss National Bank will raise the interest rates or keep them steady? Let me know in the chat. Yes, they will. Which one are you answering? Are you answering that they'll keep them steady or they'll raise the interest rates? Which one is it? Okay, I'll give you guys the answer. They'll likely keep the interest rates steady because there's no pressure from inflation. They'll likely keep it steady because there's no pressure from inflation. All right. Okay, guys. Now we're going to go over to the chart. But again, before we go over to the chart, let me just quickly run through most of the events for this week. We have CPI, we have NFP rather. NFP, I don't know why I said CPI. We have NFP coming up tomorrow. You know, the key events for October. We have NFP coming up tomorrow. It tells you how many jobs were added in the US, the strong jobs. You know, if you get a report on strong jobs and more jobs added, it gives you a strong dollar. If you have weak jobs, weak dollar, and gold continues to benefit, right? Then we have CPI coming up next week. Remember, CPI is the Fed's favorite reports. Okay, if the inflation is hot, the dollar might bounce. If the inflation is cool, the dollar would stay weak and gold would still continue to rise. And we still have speeches from the speakers from the Fed, Jerome Powell, and other speakers as well. They would shake the markets with their words and the things that they say. So always mark your calendars and stay prepared. All right. Let me give you guys a controversial question as we go to the charts now. Between the NFP and CPI, right, which one has a stronger long-term effect on the markets? And I say controversial because a lot of traders, don't like to agree with me on my stance on this question. Between the NFP and CPI, which one has a stronger long-term effect on the markets? Let me know in the chat. So between somebody's saying the CBN for the last question, the CBN will keep it, guys. It's not CBN, it's the Swiss National Bank. The CBN is for Nigeria, guys. Okay, the answers are coming in. NFP, CBI, NFP. You see, this is the reason why I tell you guys that traders don't agree with me when I give the answer to this question. I believe, and I think most, seasoned traders and investors also agree with me. I believe that it's a CPI because jobs data moves markets in the short term, but inflation drives the Fed policy in the long term, guys. So it's CPI. All right. Okay, we're looking at the charts right now. I've given you guys my understanding of the dollar index. Again, guys, still pretty much bearish. We'll see what happens tomorrow with the NFP. I don't really expect much from the NFP. I don't think that the NFP tomorrow is going to push this dollar market, to any significant high level. For those of you asking in the chat about gold tomorrow, we'll see. I genuinely expect a drop tomorrow on gold ahead of the NFP data, or even after the NFP data. It's looking really overbought right now. Divergence has formed a couple of times, but that's not really the main purpose of me thinking gold would drop. I think we're going to get some minor pullbacks and retracement to the downside before anything else on gold. But tomorrow we'll see. All right. We've created equal highs on gold between yesterday and today. Gold has capped at 3895 approximately. Twice yesterday and today. I think we should also indicate that. For those of you wondering why there are a lot of lines here, these are key levels, and most of these lines come from the lower time frames. Okay, so if I go to the 4-hour time frame, you'd see how important these key zones are for me. And yeah, I saw someone say something about divergence, right? So basically, if you trade the RSI divergence, which you shouldn't be trading in isolation, it would look like this. And now you're seeing that we have a divergence on the RSI. A divergence is basically, in simple terms, when the chart is creating higher highs, the RSI is creating lower highs, right? And in a market like this, you'd expect gold to drop, but you cannot just neglect the overall momentum. In a bullish trend, you're looking for the market to pull back for you to continue to trade to the upside, and that's what I've been doing. As you can see, breakout, pullback, find momentum in the pullback, another breakout again. This would have been a good place to get into a buy. This would have also been a good place to get into a buy as well. Pull back, the tap in, and then trade off this rejection on the lower time frames, especially if you're scalping, right? When this market broke out of this level, created this equal high here, which I'm going to map out right now. Created this equal high here. If I go to the 15 minutes time frame, you'd see how we had indications for a rejection. I told you guys, you always get the indication. You can see bearish momentum, a bullish momentum stepping in, rejection stepping in again. And then we had the engulfing candlestick that covers this previous bearish momentum candlestick. But guys, that's for only if you want to scalp like 100 pips, 50 pips if you're a scalp trader. Otherwise, you should be looking at the bigger picture when you're trading this market. Will the US shutdown affect NFP tomorrow? Definitely. Definitely. So gold is still pretty bullish, but guys, again, I'm expecting pullbacks on gold. That brings us all the way down before anything else. Okay. Let's see if we have questions. Guys, if you have questions, please let me know in the chat. I'm going to talk to you guys. I told you guys that we'll talk about something very important, how you can get October right, so you don't repeat the mistakes from September. Okay, if you're ready for that, let me know in the chat. Now, I have to tell you guys this, right? Traders don't blow accounts because of lack of strategy. Most times it's because of lack of psychology. If you look at the past month, a lot of traders got emotional, they chased gold, tried to sell the retracements, tried to, just having that roller coaster of experiences with gold and even other pairs. But we're going to fix that this October by paying attention to this part of today's session. The first mistake that you guys make over trading. Now, for you to get October right, you have to first of all create that awareness that there's something called over trading. A lot of beginner traders enter trades, enter too many trades because they feel like, I'm going to miss out on this move. Let me just start stacking up trades and, so I don't miss out on this move and I make a lot of profits. And what happened? Those small drawdowns, would pile up into a big damage. Instead of going for quantity, go for quality. Second mistake, ignoring news. Before I talk about ignoring news, how many times, I'm going to ask you guys in the chat, how many times did you overtrade in September? Do you know? Let me know in the chat, how many times? How many times did you overtrade in September? Whatever that number is, the goal this October is to cut it into half. Mistake number 2, ignoring the news. Now, September was full of NFP, CPI, ECB meetings, Fed speeches, all that, which will still happen this October. Even more interesting because there's a shutdown going on right now. And a lot of you guys ignored the calendar last month. When you ignore the economic calendar, it's like you're driving with your eyes closed. So you look at the economic calendar, and I'm not saying you should use it as a tool to gamble in the markets and trade high volatile news. No, news doesn't mean gamble. News means prepare. So did you check the economic calendar before trading any time last month? If you did not, start today. Even checking once in the morning will save you. Mistake number 3, trading without stop loss. Trading without stop loss. One of the big Well, biggest mistakes that you can have as a beginner trader is to trade with no stop loss. I know sometimes when you trade the market, the trade hits your stop loss, goes down a few pips and comes back up, and you're like, I would have just traded without stop loss and made profit. But guys, that's not a consistent way to trade, except you're trading with trillions of dollars that can hold drawdowns for weeks. Imagine someone, let me give you guys an example and show you guys something, right? Imagine someone that traded a sell trade here at this point and did not use a stop loss, and you're like, and the person is saying, well, I'm not going to use a stop loss in case the market comes back. It's going to come back, and you can see we have a huge amount of pips to the upside, and there's no way your $1,000, $10,000 would hold this drawdown. So very important that you use a stop loss, when you're placing trades. If you have a bad trade and you keep it open, it can turn to a disaster. Protect your capital. If you're trading without stop loss, it's like when you're playing football without a goalkeeper. So how many of you blew a trade in September because of no stop loss? I mean, almost every beginner trader has blown an account, blown, their trade. But October is your chance to stop repeating it. Mistake number 4, revenge trading. You lost on a trade and, you just tried to make it back fast. What happens? Potential increased drawdowns. The market is not your enemy, guys. You have to understand that. So always try to reset and come back with a clear mind. So how many of you here chased a loss last month? Almost everybody, right? The professional move is to accept it, don't fight it, learn from it, and come back clearer. Okay? Mistake number 5, not journaling. A lot of traders forget to review their trades. Journaling is not writing, September 25th, profit, September 26th, loss. No. How did you feel after the trade? What made you take the trade? How many percent of that profit is your how many percent in profit did you make as compared to your account size? If you don't look back, you repeat the same errors. When you journal your trade, it turns these mistakes into teachers. For example, if you look at your journal and you see that all your bad trades came from late entries, you'd fix it quickly. Okay, fine. I'm entering a bit too late. If it comes from early entries, you fix it. You say, oh, okay, I'm going to wait 10 pips, 20 pips. If I want to enter at this price, I would wait, or I'll use limit orders, pending orders, set it 20 pips away from my entry and see what happens. So let me know in the chat, did you even write down one trade from September? Let me know in the chat. Did you write down at least one trade from September? If your answer is no, October is your reset button. So start doing that today. This October, I want you guys to trade smarter, check the news, use a stop loss, and don't revenge trade. And finally, journal everything. All right. All right, guys. If you've got questions, let me know in the chat. If you haven't already, you can go ahead and use the link in the description to download the Octa trading app. It offers a wide range of trading instruments with low spreads, fast executions, and zero commissions. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. Now, if you made it to this point, congratulations. You now get to see the promo code that gives you a 100% bonus on your deposit. It's Ambrose E100. So you can use this promo code to get a deposit, to get a bonus, a 100% bonus rather, on your deposits. All right. We are now at the Q&A session or section of today's session. Let me know if you have questions in the chat. I'm checking to see if you have questions and I want to answer all your questions. All right. Okay, what type of data is important to record? So you want to record the pair you traded, the currency pair, the instrument you traded. You want to record the date, the pair you traded, the lot size you used. You can always come back to watch this video again, actually. So you want to record the date, the pair you traded, the lot size you used, the session. Was it New York session, London session, whatever session? The analysis behind the trade. It can be a breakout strategy, whatever it is, keep it short and sweet. Profit or loss. And then the last thing you want to put is how you felt after that trade, the lesson. You can always come back to watch this video and get the list of what I said. Sadiq said, yes, I journaled 2 trades. So that's amazing. This month, I want you to do at least 15. I'm not about to tell you to do 30 everyday journal. It's not really, you know, a lot of times when most mentors, and I say it too sometimes, I give you guys the motivation to stop doing this and start doing that. But I mean, if you want to turn off a fan, right? If your fan is rotating and you want to turn it off, it doesn't just go from the highest to the lowest in 1 second, right? It's going to go from level 5, it goes down to level 4, 3, 2, 1, and eventually it stops, right? So you journal 2 trades last month, cool, it's awesome. But this month, do at least 15, and next month you can now do 30. How can one hold trades for weeks? Well, to be able to do that, you'd have to understand how swing trading works, and you need to have an ideal capital for that. Okay, not so much, but something that is good enough for you to hold a trade for weeks. Because you'll be doing most of your analysis on the higher time frames, like the 4-hour, the daily. You'll be taking trades on the higher time frames as well. So if you've got questions, please ask me your questions. Or someone said they don't understand anything here. Well, you can always rewatch the videos, and when you rewatch the videos, ask your questions in the comments. We'll reply and respond to you in the comments, all right? If you missed out on the promo code, it's Ambrose E100. I don't really see any more questions, so guys, we're going to go ahead and wrap up today's session. But before we do that, please take 1 minute to fill out our survey. Your feedback is very essential for us to improve our future webinars. You can scan the QR code on your screen, or you can use the link in the description to give us a feedback on today's session. Now, guys, I need you to listen to me. September is gone, all right? The mistakes, the drawdowns. Oh, I'm seeing a question. Okay, let me just take that quickly. What's the best stop loss for swing trade? Well, you can't use a fixed amount for a stop loss in the Forex market. You see this thing you guys do where every time you're trading, you're using 20 pips, 40 pips, using a fixed. The market doesn't even know you. It doesn't know that you're using a 40 pip stop loss every time. It's not going to respect that you're using a 40 pip stop loss every time. You use stop losses that fit into market conditions, and then you use your lot size to shape that to fit into your risk management strategy. All right. Is it ideal to trade only certain pairs? If so, which ones are the most volatile and active? If you're starting the Forex market, Euro USD is good. I would say you should avoid gold if you're starting. It's just going to fuel, you know, fast-paced trading in your mind, and that's not what you really need when you're starting the financial market. Euro USD is good. GBP USD is good. And then before you trade gold, just to get used to the fast-paced movement, trade GBP JPY. Let's see. Can a $50 account trade gold? It can trade gold, but I mean, it depends on what you want to use a $50 account for. Are you trying to practice? If yes, fine. Are you trying to become a millionaire from it? You need experience for that. And I mean, it's talking about huge amounts in percentages for you to be able to even do that. But yes, you can trade gold with that amount if you're looking to practice and get familiar with trading gold. Yeah. When is the right time to trade the news? You guys, your questions are coming in now. When is the right time to trade the news like NFP? When? I would say you should avoid trading the news totally until the news is done, except you're willing to take the risk and just, play around with it. But just avoid it generally. Okay. When the news is done, you can now clearly see, okay, this is where this market is going to go, because it would most likely take out the buys, the sellers, and then move in its expected direction. Which trading style is best for beginners? Swing or scalping? Beginners, I would say day trading. Day trading is best for beginners. Scalping is just going to make you fast paced, and when you're fast paced in the market, you'll be leaning towards the gambling side of trading. Make money today, lose tomorrow. Make money today, lose tomorrow. That's not what you want to do. When mapping out the resistance and support level of trend lines, do you respect the wicks of the candlestick? Yes, I do. Yes, I do. But most times I just use the opening points, but I respect the wicks too. I just zone it out. I don't use one line. Most times I just zone it out, zone the entire week. All right, guys. Okay, guys. Amazing, amazing. Good questions, really good questions. I'm gonna go ahead and wrap up the session right now. And if you have any other questions, you can still ask in the comments of this video. Now, I was saying that September is going to be a new month. It's an amazing month. Everything that happened in September, the drawdowns, the mistakes, the moments where you doubted yourself and even felt like if trading was for you, you wanted to quit, all that, they're all behind you now. Don't carry them into October. Every trader that you look up to today once stood where you are. Blue accounts made a lot of silly mistakes. I mean, guys, I even sometimes questioned back then if trading was really for me. But what separates those kind of traders from the crowd is simple. We learn and we refuse to quit, and we kept showing up. This market doesn't reward perfection. It rewards discipline, it rewards patience, it rewards consistency. The trader that can take a drawdown and still come back stronger. That's the kind of traders this market rewards. So I want you guys to make a promise to yourself tonight. October will not be another September. If September was bad for you, even if it was good, October would be better. So this month, I want you to trade with purpose. I want you to protect your capital, and I want you to respect your process. The market is not here to break you. The market is here to shape you. And if you stay consistent, one day you remember all the live sessions with Ambrose that you had. You remember how you had to put in the work, and you'd say, that was the month I stopped repeating the same mistakes and I started becoming a proper trader. Thank you guys for joining today's session, and I will see you next time. Bye, everyone. Peace out.